Hi, Hamish Conway here, and welcome to another episode of TACOS Tuesday, the best place for Amazon ads, tactics, and strategies. And this is episode 68, where we're going to dive into the final details of the Black Friday deal event window in Australia, where the attribution window has completed, and we've got the full data there. And so Sebastian has been analyzing what has happened, looking at the reasons why the data has shifted, and looking forward to sharing that. So welcome, Seb.
Thanks for having me.
Excellent. It's good to see you've got your Sell Global shirt on today. There you go.
Yes.
Can see it. Excellent. On brand. Excellent. Anyway, so look, this is something a little bit different that other agencies might not do, but we kind of think it's interesting just to share what is actually happening. We've got some numbers here. If you can see them, great. If not, we'll be talking to them anyway, as that's the case for most people. But look, with the data you're going to look at is just Amazon Australia, not our US or Canada clients or UK clients. So just Australia, and we're only looking at those clients that we've also got data for from 2024. So we're going to compare to 2024. So some clients there that we did do the deal event window with, but we couldn't compare the stats. So we tried to keep it as clean as possible. It's not perfect, but this is pretty statistically relevant anyway. And so as we go through this here, just listen in for some of the tactics that we used to really optimize our ad spend. I think you'd be surprised in terms of the uplift here, and also that yes, there was more ad investment, but done in the right way, and we'll tell you what that right way actually is. So with that said, Seb, just bring this up. Any other aspect to frame what we're about to discuss?
We'll get into it, but I think that what this data will show you is that Amazon AU is maturing, and specifically for certain categories.
Yeah, great. Okay. All right, so let's share it. Now, if you are looking at this on YouTube, my apologies. It's quite small, but that's fine. Most people here are listening. So, all right, Seb, let's, the first number we've got here is total sales. So that's obviously a big number, and we've got 5,292,000 and some change. But the big news is that was up 34% on last year, 34.7% on the previous year. So you run me through the split here of organic versus ad sales as well, and what difference we noticed there.
Yeah, so this was probably one of the stronger Black Fridays that I've seen in quite a while. 34% increases, and remembering this is not 34% increase off a normal day. This is a 34% increase off last Black Friday. So an already elevated period of time, and we saw some significant growth. So the split was 3.7 million. I'll just use big numbers. I won't go into the thing. Yeah. 3.7 of that 5.2 was on organic sales. So 3.7 million on organic sales and 1.6 million on ad sales. That was the makeup there. So
but then and the percentage shift there is what's interesting.
Yeah, so we saw organic sales grow by 4.2% from last year, and we saw ad sales grow by 300% year on year. So that gives you a really good indication of the maturity of the market, because it's like organic. A lot of brands that got in early saw very good organic growth year on year, predominantly because they were the first movers when they came into their category. You can see during this event that a large majority of the growth actually happened on the ad side of the equation, and not necessarily on the organic side.
Okay. And just while we're still talking about sales, and before we get into the reasons why we're seeing that shift there, talk to like total units and the organic ad split.
Yeah. Obviously, the next piece down is units, which is the total units were 122,000. Which was a 38% increase on last year. And then the split between organic and ad for the total units was 91,000 for organic units, which was up 16%, and ad units were 31,000, which was up 200%. So similar story, but you can actually see that organic, if you're just looking at sales, it makes it look like that there wasn't any organic growth. But if you look at the units, you can see that there was more organic growth in the sense that more units moved. It's just that obviously the discounts were probably more aggressive organic units side of things, which is why the revenue wasn't pacing at the same rate as the organic units. But similar story in regards to where the majority of the growth came from the ad side of the equation for units, with some significant growth there.
Okay. Now, there's also in the mix here is the average selling price, and this starts to work into what we did a little bit differently here. So do you want to talk to that and how that pertains to both organic and ad sales?
Yep. So the average selling price was $43. It was down 2.9% on last Black Friday. What's important to note here is the makeup of what we're doing on our end as well. And so what we kind of have seen through this event is that we're using our ad spend to really focus more, not necessarily on products that are your best sellers, that have very good organic ranking position, but using ads to drive maybe a new range that has really good discounting. We need deal tags through the event, but we're using ad spend to really drive and bring up in ranking, because that's what we want to do with the ads, is really boost ranking of products and product groups that are just don't have the visibility. And so what we can see here is that the average selling price, even though it was down by 2.9%, it was actually down much higher on the organic side, as you can see by the organic sales being only growing by 4% and organic units growing by 16%. We can see that the average selling price was down, and that's prominently because we were pushing our ad spend towards less of our best sellers and more into those other groups.
Yeah.
And letting price do the lift there.
And let price, yeah. So we're kind of, the strategy was where you've got a bestseller organically ranking in, number 1, 2, or 3, and with a deal tag and a decent deal tag, that wasn't getting much of the attention. That was just the rank and the deal tag were doing the heavy lift. Right. There was some brand defense happening around it, but we put more of the attention on how do we elevate and lift these other products, and often they were high price products as well. And if you think back to some of the other episodes that we've done, we were saying that these deal events can favor higher priced products where people are really after a deal. They're not so much looking for a product going from $25 to $15, but it's more one going from $400 down to $300, for example, where they're really going to save. And so that played into where we did target on the paid side of things. Is that correct, Seb? Just to summarize?
Yeah, absolutely. That's correct. And you can see that in the ad sales, right? Ad sales grew by 300%. Ad units only grew by 200%. So you had a much bigger increase in revenue compared to the units you sold on the ad side, versus it's the inverse of that for organic. Organic only grew by 4%, but units grew by, total units grew by 38. So there's a whole group of products that are in that camp that Hamish just mentioned that are smaller priced. They've got deal account discounting, but it's like customers, they don't care as much about those. But you got a $400 product with a 20% discount on it, or a $200 product, and that's making a much more significant impact. And also, as you go on Amazon, you'll notice that most of the cheaper products rank well organically high on Amazon, so because of their price point and unit velocity. Whereas those $400 products, it's essential that they have advertising, because they've got no visibility otherwise, because they just drop away to page 2 and page 3, etc.
Yeah. So I think that's a big takeaway as you look at next year. And in previous episodes we had talked about in preparation for deal events, and even last week's where we had some interim results coming through, that you can use these deal events to boost your organic ranking and hold. And we gave an example of one that had been in position 12, got to position 1, but it's held at position like 3, 4, or 5. I forget now. So that will have ongoing organic sales benefit, and that's what we're really trying to do across the board. So that is that part of the story.
Unless you stock out. So that's super, super important. What we've noticed is you lose all of that momentum if you stock out. So if you get that boost and then shortly after the event you stock out, it's not worth it. Don't do it. You're better off just not playing the game in that case.
Yeah. Really good reminder too, in terms of planning, and as you look at how many units you are prepared to move through the deal event window. Just a little bit of a segue, Seb, before we start looking at the page views and clicks, etc. So what's the experience been like? Just to give listeners a bit of an idea. There's you and the whole ads team working through this kind of 2 week and a little bit window, like what does it look like? What are you doing on a day-to-day basis, and how do you kind of make decisions as you go through?
Most of our decisions are already made when we come into the event, in the sense that we analyze last year's data and we use that as the basis on what we kind of put together our strategy for this year. But what happens is that obviously every year is not the same. And so what we spend most of our time doing is reacting to anything that's changed or that's different to what we expected performance to look like. So in previous years, the first day is always the strongest, and that was the same this year as well. But last year, I would say as a percentage, it's like, I need to look at the percentages, but last year that first day was much, much more prevalent, whereas this year it wasn't quite as big as it was last year. So it looked like when we had the first day, we were in for a softer Black Friday, Cyber Monday. Yeah. But then the weekend of the actual Black Friday day, because remember, this was a 2-week long event, the actual Black Friday day was really strong, and that whole weekend was quite strong, which we didn't see as much the previous year. So there's shifts like that. And so those shifts mean that we've got to adjust. That includes budgets, but also what we're willing to pay from a bidding point of view.
Interesting. Okay. And so, yeah, it's just changing bids and seeing what the competition is doing as well, because that's
exactly.
That's a part of the equation, and what real estate you can actually get while you're there. So it is all go. I know the ad spend was a bit tired come the end of that 2 weeks. I mean, as a little aside, like I know coming into this, like being in Aussie and just in Sydney, and it seems like there was a bit more of a buzz. And so, I mean, this here could be an indication that consumers are wanting to treat themselves this Black Friday and spending more than what they may have previously. Could be accurate. And also a combination of some growth in the Amazon Prime membership numbers as well, and the growth in the channel will be a factor of it. Not 34%, I wouldn't have thought, but it's an interesting indicator again as well of how important Amazon is to the mix of what people are doing.
Yeah, and I think they're getting a handle on certain categories, which they haven't had before. So there's still a lot of upside to Amazon, not just from maturing categories, but also from categories where they haven't had much cut through. Yes. And they're starting to get that cut through into those categories.
Good. All right. Let's talk about the traffic side of things. So what did you notice from the total page views, and how was that broken down as well?
Yep, so total page views were 1.2 mil, or basically 1.3. Ad clicks, which is kind of our equivalent of the ad side of that equation, were only 150K in ad clicks. But what you'll see is that year on year, the total page views only grew by 7%, whereas ad clicks, grew by 200%. Now, that 7%, it is off a big number. So even though we're only saying 7% off 1.2 million, it is 1.2 million views. So, like that's still significant, right? Yeah. Whereas the ad clicks were off a much smaller base of only 150K. So what we noticed is, and so this is a bit of an indicator of when I was saying that the categories are maturing, because the overall organic traffic, as in if you're just in the number one position, that kind of only grew at that 7%, which is still significant, like I said, off that big number. But the rest of it had to come from somewhere else. So that traffic all came from that ad click side of things. This is a little bit of an indication, not across all categories, but this is a little bit of an indication that there is limited digital shelf space. People think that digital shelf space is unlimited, but it's not. Like anything, you're not going to page 2, you're not going to page 3 to find your purchases. You are going to page 1. You are generally like 50, 60, 70% of the people, depending on what category you're in, are purchasing on that first page. So that's limited, right? You can only get so many listings on that page. And so this traffic shift, I suppose you would say, it is kind of an indication of that maturity in some of those.
So the ad clicks were up 200%, to be clear as well. So total page just by 7 and ad clicks by 200%. And I mean, linked to that though is the ad spend that increased by nearly double as well. So talk to me about the thinking here then, and as we're going, right, we want to not leave anything to chance here, but we're prepared to spend, well, the client, that was 186% up on ad spend. drove a 200% increase in ad clicks, but a 300% up on ad sales. So these numbers are starting to look good. So talk about the conversations you had in around ad spend and investing more this year than previous years. So as you were talking to brands, like how did those conversations go to get them to see that this was going to make sense?
Yeah, so most of them, the conversations were, we would have a look at last year and we saw that there was decent growth and they wanted to, and we would have a look across their catalog and there might only be 20% of their catalog that was being advertised. And so kind of a bit similar, generally when we look at brands, there'll be one or two products that are the hero products and they're doing a massive amount of the heavy lifting across the account. And then there'll be this whole group of products that are sitting underneath that are sometimes they're better margin products and there's lots of upside that they want for that group, but they're just not moving kind of enough. So a lot of this ad spend increase was already seeing the benefits by their top, like their hero products. Like their hero products are selling really well, so they know there's potential there. Like, okay, that I've got the proof in the pudding, so to speak, with the hero product. And then going, okay, well, can we replicate that with some of these other products? And so that was obviously a bit of a test, but most of them, like as you can see with the data, it's like it paid off for them in a big way.
Yeah, and this is all keeping in mind in the 12 months from last year, we've been working on their ads and growing their sales, and so their ad spend has naturally been increasing anyway. So it wasn't necessarily like, right, we're going to double what we spent last year.
Right,
wasn't
exactly.
really the conversation. It was more like, okay, it's been growing anyway, using TACOS as a key measure. So the number's been growing, but it was this year at 198, double the spend, so nearly. So, okay. Anything else on that as you look at the mixture there? I mean, I was going to talk around, we're getting into the next part here around ad click-through rate and ad CPC conversion. Do you want to talk to those there?
Yep. Okay, so click-through rate was 0.56%, which was up 34% on last year.
Yeah, that's meaningful, right? That actually equals the total sales. So just on an ad click-through rate, getting that up 34%, what did you do differently there to drive that? Because that obviously made a big impact.
Yeah, I would say most of that's actually driven through the deals more so than the ads. So the ads obviously get the visibility and top of page, and click-through rate is a big part of placement. Like if anyone knows ads, they know top of search has a very high click-through rate. Rest of search and product pages have much lower click-through rate. So top of search does drive a higher click-through rate, but also when you're on a deal event, one of the main things that drives click-through rate, even more so than the ads, is the deal tagging and those things. So having good deal tagging, so we saw brands this year that put their best foot forward, and what we mean by that is properly planned inventory, committed proper amount of units for deal tagging, worked with Amazon, which was we know is very tricky to get aligned on that. They did very, very well.
Yeah, that was good. That was good, and even some just straight out of the gate launching into this window as well had good results. Okay, so but it's still better than last year, right? And so that's as we're comparing there. That's so it's just been more organised and in some cases deeper discount, but also the right ad placements being a key part of this.
Yeah, and I don't even know necessarily if it was deeper discounts. I think that they just offered more of their catalog.
Right, okay.
Rather than like just 2 or 3 products, they might have offered 20 products of the catalog that on discounts. And so I think that more exposure helped.
Yeah. Okay. All right. So let's just look at some of the other stats here. So we got the CPC.
Yep. So CPC was $1.26. That was actually down 4.7% from last year. Now, CPC is an indication of how aggressive we are being with bids, and CPC is cost per click. So every click that we got during the event cost us $1.26 on average. So that's really kind of cost per click is very much tied to conversion rate. Because that cost per click can go up if your conversion rate is low because you're driving more clicks in there. you're not getting those kind of conversions there. But cost per click at $1.26 kind of shows you that, and being down from last year kind of shows you a little bit that we weren't being very aggressive with our bidding. What we mainly did is kind of increase spend, which is what you can see there. 186% increase in ad spend, an actual 4.7% decrease in CPC. And that's showing you that sometimes all you do need to do is be focusing on the budget. Now, that doesn't mean that we weren't aggressive with some brands. This is obviously like a mix and a makeup, but in general, across the range, it's like CPC was down.
Yeah. Okay. And then total conversion rate, and split that out also with ad conversion rate.
Yep. Total conversion rate, 8.5%, and ad conversion rate, 17.3%. Total conversion rate was up 44%, and ad conversion rate was basically flat, more or less the same. So what's interesting about those two, obviously total conversion rate being up, again, this is probably an indication of the deal tagging. More products being, we've had issues as well in the past where deal tagging isn't showing correctly and things like that. So I think that's getting better over every event as Amazon works out their system as well. And then the ad conversion rate, and you'll notice the ad conversion rate is much higher than the total conversion rate, and that's normal. Ad conversion rate is always generally higher because if you look on an Amazon search page, you'll see that all of the top placements are all basically ads, and that's the highest converting kind of placements.
And so therefore total conversion rate has gone up 44% because more of the sales have come from ad sales. Ad sales up 300%, organic up 4.2%.
Right.
So there is that weighting there towards ad sales, which could also indicate there's some cannibalization has happened.
Yes.
But so talk to me about that. And is that a bad thing? Obviously, looking at the numbers, not. But how do you view that?
We never want to cannibalize, really, but as indicated, you can kind of see in the numbers that there is some of that happening. Otherwise, why aren't you kind of seeing that same kind of growth? But for those that don't understand what cannibalization is, basically, and mostly it happens on brand defense, what we call brand defense. So if you were protecting your own brand name by advertising on your brand name and you serve an ad on your brand name, there's a good chance that someone was going to purchase without you serving that ad. But because you served the ad, they ended up clicking on the ad and making the purchase through the ad rather than through the organic listing. And we serve brand defense because there is a chance that they don't, like if there's a competitor there, that they click on the competitor's ad and that they purchase the competitor instead of you. So we don't want that to happen. And sometimes we're willing to have a little bit of cannibalization to just make sure that doesn't happen, because the ROAS is very, very strong on it. It's very good performing ads. Unfortunately, you can't have like a perfect scenario where you're like, I only want to serve ads to people who weren't going to click on it. It doesn't work that way.
Yeah, that's not real.
Yeah, that's not something you can do. So you have to choose what you're willing to do there. So we only limit a certain amount of our percentage of ad spend there. So we don't put heaps of ad spend behind it, but we do protect it in the event. And particularly with deal events, we just think that a competitor running a deal tag is got much more of a chance of taking one of our brand customers kind of away. And that does influence your ROAS. Although last year we would have had cannibalization as well. That ROAS increase and whatnot is still part of that same conversation last year.
Well, the ad ROAS is 8.2. 8.12 was the number, which was 41% up on last year.
Right.
So that's a significant improvement as well. And that's a big justification for the strategy that you put together for the clients.
Yeah, and I would say don't expect that. This is rare, what we're seeing in front of you guys here. Most of the time, we see ROAS decline over an event period of time. We, in this particular instance, we've obviously got a lot of products in that very high end, like price point range, which and with very strong discounting, which is why that ROAS has been so good, because obviously it boosted conversion rate and that flowed on. But I would say I wouldn't be alarmed if ROAS went down over so if you're looking at your numbers and comparing them to ours and you're like, oh, my ROAS, declined by 30%. I mean, if you're comparing it to last year's Black Friday, that's probably something there that you need to look into. But, in general, I wouldn't be worried if your traffic went up and your ROAS went down. If your traffic stayed the same and your ROAS went down, that's a problem. Or if your traffic went down and your ROAS went down, that's a problem. But if your traffic went up, very often it's fine for your ROAS to be coming down a little bit as well.
Yeah. Okay. And good. And then TACOS at 3.8%, pretty low anyway. But actually, that looks like it was up from the previous year. So is that a major concern there, or in the context of everything else, that's okay?
No, obviously you need to work out what that needs to be for your brand based on your margins and things like that. But in this case, kind of what we've talked about over the traffic one, the organic digital shelf space is gone. Like, as in, you're not getting any freebies there anymore. So to drive growth, you are going to need to look at using advertising as a vehicle.
That's right. And hence, ad spend has increased, hence the TACOS has increased, or ad spend increased at a higher rate than the overall sales. Okay, so pretty good results. Well done, Seb. And thank you to our clients as well, who trusted us to put together the right strategy for them. So if this is something that you're looking at this here, comparing your results, and you're thinking, right, next year we want to work with an agency that can help us get these sort of results, then connect with us. Go to gosellglobal.com and look at services there, and you can find management for Amazon ads, and you can connect with Seb. We can do an audit of your results as well, and that'll highlight the opportunities where there could be some wasted spend, mistargeting opportunities, etc. And our advertising audits are, like the other day, we had a company that said, I learned more in understanding that audit in 1 hour than I had in the previous year working with this other agency. So I think that talks a lot to the detail that this goes into. So if you really want to look at 2026 being the year you really crack it on the ads front, then make sure you connect with us. Seb, anything else to share?
All good. I think that this is a good wrap up.
Yeah. So we've got one more podcast we'll do for next week, next Tuesday, which will be basically our learnings from 2025 and the year in summary. And then we'll be taking a 3, maybe 4 week break over the summer there. And then we'll get back into things. Tune in next week and we'll give you our highlights from the year and maybe even just some predictions for what we see happening in 2026 as well. So look, thanks Seb for putting all that there together, and thank you people for listening, and we really appreciate it. If you have liked this, then do share it and subscribe and all of those good things there. So thanks so much, appreciate you, and we'll see you next week. All the best.